A very good afternoon, everyone, and welcome to this tweet chat. And I would like to thank everybody who's managed to join in. And today we are having a very interesting conversation on the matter of excess. It is a common. It's one of the biggest, one of the main. A common question that we get asked all the time. I have insurance and I have excess, and why am I being asked to pay, yet I have excess? So what really does excess take care of? Or they've done an assessment, and while I have excess, but I'm being still asked to pay some amounts of money towards the repair of my car. And so today we are starting our series of just addressing some of the most frequently asked questions. And today we are going to talk about excess and everything and anything that has to do with motor insurance. So we are starting in another 2 minutes. Get your notebooks on, write your questions. If you've got any questions to ask, you can use the chat. You can use the chat function. You can post your questions there. And in another 1 minute, I'll be introducing Emily Onyango Ferry, who is an officer from our Consumer Protection Office, and who will be taking us through today's chat. So karibuni sana, and see you in 1 minute. Thank you. The lady on the screen, the brilliant, gracious lady, is one Emily Onyango. As I said earlier, Emily is our Consumer Protection Office. She's an insurer, very many years of experience under her belt, and both from the industry and from the regulator side. And she's been an officer at the authority for quite a bit of time. And so she has received complaints, she has resolved complaints, she's resolving complaints. And some of the things that we want to talk about are those questions that get frequently asked. And the questions that we realize that for us to engage and to move ahead better, and just to enable you as a consumer to really know what it is that you're getting into when you're purchasing insurance. Today, we want to talk about excess. Next week, we'll also be having a very, very interesting conversation. We'll talk about it at the end of the session. But I would like just to introduce Emily, say something about yourself, and then you can just start and tell us, really, what is excess? And why is it called excess in the first place? And why should someone buy excess when you're purchasing motor insurance? So welcome, Emily. Thank you. And as I said earlier, we can use the chat function. If you have any questions, we could use the chat function. If you have any question, you could also raise your hand. We have the icon for raising of hand, and then we will take it up from there. Emily, anytime, whenever you are ready, you can proceed. Yeah, I had some noise from your side.
Good afternoon.
Yeah, now that's nice. We can hear you. So you can proceed, Emily.
All right, thank you so much. Thank you, Noella, for that kind and elaborate introduction. I really appreciate. So just to take this opportunity to get to know me, my name is Emily Ferry. From the flyer, you could see Onyango also, so I use both names. They are both my names. So at IRA, I work as a Consumer Protection Officer. And just to give you a bit of my background, I've been in the insurance industry for a while. I'm an insurer by profession. So I've interacted with many, many customers who have issues, concerns, queries about why we should have excess after paying premium. So I'm well versed with the challenges that our customers have on a daily basis when it comes to excess and queries around excess. So I just want to take this opportunity to welcome all of us. I can see we already 26, and we keep on counting. I believe more and more will be joining this virtual platform this afternoon to just understand, to ask questions, and even interact with IRA as the regulator of the insurance industry. So this afternoon, I just want to go through what excess basically is. What is this thing that we call excess? Feel free to put in your queries on the chats. We'll be able to address them once we've gone through what we need to go through, what excess is all about. So the concerns that I want to address this afternoon is how excess protection works. And before that, I just want us to get to understand what is this thing that we call excess and why excess. So excess in insurance, and particularly in motor insurance, is an amount of money that an insured, and when I talk about the insured, is the person who buys the insurance policy, the policy holder. It is the amount that an insured pays when making a claim and is part of a share of the loss. I hope we got that clearly. It is an amount that you pay at the time that you are making a claim, and is a share of the loss of the, is a share of the loss. Usually excess is defined as a percentage of the sum insured or a specific amount. Like when you go to your policy, you'll find like excess to claim for a motor damage for your vehicle to be repaired. You'll find like it's defined as 2% of the sum insured, and with a minimum of maybe 15,000 or 20,000, depending on the value of the vehicle. And this is not standard across the insurance motor policies. So you'll find like if your 2.5% is less than the minimum that is specified, you'll be required to pay the minimum amount, which is clearly defined in the policy. What is the purpose of excess in a motor insurance policy? The purpose of excess is usually to inculcate or to promote a culture of responsibility or due care by the insured. You can imagine a scenario or an industry where we don't have excess. Any scratch on the road, any mishap on the road will end up at the insurance offices. So usually just to instill that degree of responsibility that you need to take due care of my motor vehicle when I'm on the road, you know, you need to avoid accidents at all costs. And as insurance professionals, we usually say that when you're insured, you also act as if you are not insured. So it's just to bring a bit of due care and responsibility on the part of the insured. As much as you pay the premium, as much as you pay your premium at the onset of the cover, you should exercise degree of responsibility. And usually also it is intended to reduce the administrative costs for the insurance company because the insurance will not deal with any and all the small costs, like 1,000, you get a scratch or you get a brush on the road and you take it to insurance. It's intended to reduce the cost, the administrative cost, because it will be overwhelming for the administrators, that is the insurance companies, to administer or to have to deal with all those repairs and the vehicles having to be held up at garages and all that. So I hope this far we understand a bit, and people who have been asking, clients who have been asking, after I pay my premium, why should I also be asked to pay the excess? I hope that makes it a bit clear. Is there any query thus far on why? Is there anyone who doesn't understand why you still need to pay excess?
I have a query, and I just want to ask, I'm asking for many, you know, you say asking for a friend or something like that.
Yes.
When you're doing your introduction, you talked about that the excess is you're paying for a share of, for lack of a better word, the cost. So why would you share the cost and you have taken insurance? And really that is why you are transferring the risk, because you want to transfer the problem to somebody else. Why would you then again be made to share? And as you are answering that, then Boniface is asking why no blame, no excess does not cover PSV vehicles. As in, why are PSV vehicles exempted from, or do not take part in this no excess, they're not allowed to purchase the no blame, no excess rider or addition to their covers or their policies. Thank you.
Thank you so much, Noella. I understand that has been an issue. It has been an issue. Why should I pay for a share of the loss? I believe the answer has already been given, and it is just a matter of choice. You can choose not to have that excess paid by paying a small premium to get an excess protection. So I believe that question has already been answered by the industry, and a number of insurance companies already have that product. If you don't want the inconvenience of having to participate in the cost of the loss, you can get excess protection. And we also have policies that have no blame, no excess. So it is upon the insured, the policy holder, to look out, because these products are in the market. If you don't want that inconvenience, there are insurance companies that give no blame, no excess. So at the time of the loss, you'll not be asked to pay the excess. If you are reasonable, a prudent driver on the road, and you are not to be blamed by the police, have not blamed you for the accident, there are policies that already have that provision. But you'll find like policy holders or insureds will not, policy holders usually, people don't want to pay that extra cost, that extra premium, because everyone wants to save on premiums. The lower the premium, the better for the policyholder. So at the point of purchasing that cover, if you are asked to pay the additional costs, you should be able to pay the additional cost so that you avoid that inconvenience. So the other issues about the PSV insurances are not allowed to have this, the excess protection. I believe, given the experience that I've had in the industry over the years, the experience of the PSV is a bit, the loss ratios are a bit too high, and we don't have a very established market and insurance companies that cover the PSV vehicles. We are, so far, I think we have, is it 3 companies so far? So our market is not very established, and we don't have an elaborate market for the PSV market, and the loss ratios are so high. We haven't been able to get a good control, a good risk management of our PSV accident loss ratios. So for that reason, an insurer, our insurers in the market are not willing or ready to give an extra, to that extra benefit of not having to pay for the excess because of the loss ratios that are experienced in the market so far. So I think that answers our question. I know it will not satisfactorily answer, because we need to have this dialogue amongst ourselves. What needs to be done? What needs to be done about the insurance of PSV vehicles together? It needs to be a common language so that we agree what needs to be done in the insurance industry. Thank you.
And another question that I have been asked in the course of outreach activities is how comes somebody says they have paid for the excess, and then when the assessment has been done, the amounts for repairs are much lower than the excess amount. And so they're told that because the amount is lower, you just need to pay. How does that work?
Thank you, Noella, for that. That's a good question. And that is my next question that I want to just highlight on, how excess protection works. So I believe whoever is asking that question will be able to get the response on that matter. So how does this excess protection work? So excess protection is an optional extension to an insurance motor policy, which is given at a minimum additional premium that is paid to the insurance company. So the reason why it is given is that it takes the obligation of paying the excess from the insured at the point of making a claim. Because usually people don't foresee when you'll get into an incident, you might not be financially sound at that moment. So excess protection is intended to take that obligation from the insured or from the policy holder when making that claim, because you might be least prepared for that payment. Maybe you have a high value vehicle, let's say a vehicle of 5 million, and your excess might be well over 200,000. So at that time, if you didn't anticipate to pay the 200,000, you might be least unprepared. So if you get the excess protection, at that point when you get an accident, that obligation is now lifted from your shoulders and you don't have to pay it. Or the other option that we mentioned about was the no blame, no excess. If you at that point you find yourself, you are not to blame for that accident, and that can be confirmed by the police records that you are not to blame. If you got a policy that has no blame, no excess, at that point of making a claim, you'll not be required to make that excess. But it will not work where the claim is below excess. So excess protection works, it works for claims that are above the threshold of excess. So anything that, if your excess is, let's say 50%, when you work out the percentage and your excess is 50,000 shillings. So if the assessment has been done and your excess, the cost of repairing your vehicle comes to about 15,000, meaning it is a minimal damage, excess protection will still not work for you because excess protection does not lift the threshold of excess. So any costs that are still, any repair costs that are still below the excess, in this example that I've given, any costs that are below 50,000, the insured will still have to pay for the cost of repairs. But anything above 50,000, now the insurance will take care of everything and do the repairs. Then the excess protection also just works for one claim per the insurance period. If you're insured from January to December, and you've had maybe one claim in January or February, and you made a claim, the claim is above excess, you made a claim and the insurance paid, you need to reinstate that excess protection in case, peradventure, you have another claim, because if you do not reinstate it, because that premium is calculated at inception of the cover. So you need to reinstate that excess protection. Peradventure, you get involved in a different incident after February. If you do not reinstate that excess protection cover, then for subsequent claims, you cannot make another claim on it. It's like after making the claim, you've exhausted that cover and you need to reinstate it. So I hope you have understood that clearly. And also as an insured, you need to understand, because excess protection is given in most cases in the industry for own damage, that is for repairs to the vehicle. I've had very few scenarios where we have excess protection, and this one I think maybe from consultation with the insurance companies, I've had very few incidences where we have excess protection for theft of a motor vehicle. I know one or two companies could be giving it, but mostly it's given for own damage. So I hope that makes it clear how excess protection works. Unless we have a question from the audience, you need more explanation.
Yeah, thank you so much, Emily, for that. I see we have a question from Madialo Jack. And Madialo is asking, what happens if I have purchased excess protector, or I'm on a no blame, no excess? As a third party, how will my claim be handled? Madialo, if you are listening to me, I think if you'd put up your hand or if you could unmute your mic and ask your question. I don't think I'm reading it and explaining it as you might explain it yourself. If you can listen to me, if you're hearing me, Madialo, just ask your question, please.
Yes, I'm hearing you.
Yes, please, you can proceed.
My question is, from Emily's explanation of the use or operation of excess protect and no blame, no excess, what happens in a situation where I have an excess protector or I'm on a no blame, no excess, but I've been hit by a third party, but the claim is below the excess? Is the third party insurer liable to sort out my claim?
Thank you, Jack. I know you are a well-seasoned insurance professional in the market, and I believe you also have the answer to this. When it comes to third-party liabilities, there's a need to establish whether liability qualifies or not. Jack, that is the starting point. But for your insurer, where you're insured, if you are below excess, the claim is still below the threshold, and it means you qualify to be compensated by the person, the negligent third party who has hit you, who was blamed for the excess. But you know the threshold will be to establish liability. Yeah, and liability for third party claims is not established under the insurance contract. It has to be proven, yeah, beyond reasonable doubt. So usually for third party liabilities, you know, there's a you can negotiate. You can negotiate out of court, or you have an out of a court process to determine liability. So it is a claim that you can take with the insurer of the negligent third party, but you know you cannot take it there as a matter of right, Jack, because that liability has to be proven. The contract that the policy of insurance has not outlined how that third-party liability will be established. So liability must first be established before any claim can be paid. But anything below excess will not be taken care of by your insurer, especially if you're on third party only. You know, your protection is only for third-party liabilities. Jack, I hope I've answered you. I have another question on WhatsApp. I just want to read it out loud if you allow me. The question reads that what happens when police blames you for causing an accident that leads to minor damage? When the police blames you for, I don't know whether this is now the insured. When the police blames you for an accident that leads to minor damage. So if you have minor damage that is above, you know, the minor damage can be below or above excess. So if it's above excess and you have excess protection, definitely your insurance cover will take care of that. Or if you have no blame, no excess, your vehicle should be, your vehicle will not be repaired because you are blamed. But if you have excess protection and the damage is above excess, then the insurance should be able to take care of the repairs to your vehicle. I don't know who asked this. I wish I would get a verbal question so that we get clarity on what the person asking really wants to know. The other issue is what is the late payment fee? I think he's asking why is the late payment fee applicable on agency renewal, please? And how do I pay it? Thank you. This is an agency renewal. It's not within our scope for today, but I will try and answer at the end of this. When is it? Please explain. No blame, no excess doesn't apply to PSV. I think I've already tackled the issue of PSV, and no blame, no excess is about the loss ratios that are so high in the market so far, and insurers are not ready, you know, as we are regulators, but we interact a lot with the insurance companies, and we know the kind of losses that are prevalent in the PSV industry, and it's something that we cannot really throw out, but it's something that can be taken up for consideration. But you know, the insurance is given by the insurance companies, not IRA. So it's something that can be taken up. There's an association of Kenyan insurers that can deliberate on this and see the best way forward. It's not an answer that IRA would give on the spot without engagement with the insurance companies. Thank you.
Thank you, Emily. And I've also been asked. I'm getting questions that you know, from the complaints that we receive, especially on motor. Motor, of course, is compulsory. Is it possible then to make excess, you know, to also the right to be kind of compulsory and to avoid the lots of questions and inconveniences that at times consumers are faced with? Because the issue is you get to buy excess when you have an idea. But if you do not have an idea, you'll be sold for the very basic of covers. And maybe while you are at it, you could maybe also want to talk about some of the additions or the riders that people who are purchasing motor might consider to purchase, just so that consumers out there are aware that the motor insurance, the motor vehicle insurance covers come with much more than just the basic. Like if you want to if you are inconvenienced and you want to take care of towing services, if you want to take care of, say, a courtesy car, this kind of things are available in the market. You just need to know. I think if you could maybe address that before we talk about the other questions that I'm seeing are coming online. But maybe I could just read them. Martin Wainaina is asking, why can't the insurer compensate the insured who is blame-free in the accident, but the claim is below excess? I think you had spoken about this, but you may just need to again to repeat. You know, the more you repeat, the more again we get to hear it. He's asking why, if I don't have, if I'm not to blame, and the claim is below excess, why should I not be? Why should the company not, or the insurer not take care of that? And then what happens in the cases of self-involving where there is no one to blame, that it is self-involving and there's no one to blame, and does the excess apply or not? So maybe you could speak to those. Thank you.
Okay, thank you. Those are wonderful questions and I really appreciate them. I would want to just make it very clear that when we buy insurance, you know, we should be very, very aware of what is our need, what do you want to protect, and how much is your purchasing power. So it's like when you are going to buy a car, you'll go out there, you'll do the shopping, you'll identify the car, you look at the fuel consumption and all that, all the specifics that you require for your cover. So it's the same as when you are also buying insurance. Go out there, don't go to one insurance company and settle for what they are offering to you. Go to like 3 insurance companies, make notes, compare what are the riders that they are giving you, because the basic motor insurance policies will give you comprehensive cover, which covers own damage, theft, fire, and third-party liabilities. And there are also add-ons, like the issue of no blame, no excess. That's an add-on to a policy. So check out these insurance companies. Which insurance companies will give you the best of the cover, given your ability to pay? Are you able to pay the premium after they've given you the add-ons? Are you able to afford it? So don't settle for what the agent brings to your office, because I know the way Kenyans buy insurance covers, you'll sit in your office and get contact for an agent and call out and tell them, my cover is expiring today. That is not the way to buy. Let us take responsibility. Let us go out there. Let's compare what is out there in the market, compare what company A or company B has to offer, then settle down on what best suits you and what you are able to afford. So when we say that if I get involved and is herself involved, why should there's no one to blame? And so self-involved, it depends on the contract now, the policy document. What does your policy document outline? If the policy outlines that you have no blame, no excess, or you have excess protection, you should be able to be compensated. There should be no issue. But if you have no one to blame and your cover on excess says that no blame, no excess. And here there's no third party that is covered. I think that's what Jack is trying to say. My cover is no blame, no excess, and there's no third party. In fact, if there's no third party, then why would you be looking for anyone to blame? So I believe that kind of scenario, and if there's no one to blame, the insurance should be able to get all the facts, and if it's a genuine case of an accident, then they should be able to take it up. It's only that, I'm not an insurance practitioner, but a prudent insurer should be able to evaluate, after evaluating all the circumstances of an accident, they should be able to evaluate and say, in this case, no one was to blame. Maybe you just went off the road and went into a ditch, or you are pushed by a third-party vehicle, you went into a ditch. They should be able to accommodate those kind of claims, but you'll find, like in most, not really most, a number of cases that are self-involved, also investigations have to come in, and some of them do not turn out to be, genuine cases. So these are cases that will not insist that insurance has to take up. But I believe any prudent insurer would look at the circumstances and make consideration. If the client for sure had a genuine case of an accident, and they should take up. But I believe the reason why this no blame, no excess is because when you're involved with a third party, and the third party, I don't know why I'm having noise. Moses, you can kindly mute if you're not speaking. Moses and Anna, please mute your microphone. Moses, you're still having a lot of noise from your end. Please mute, Moses.
Anna Mazera, please. Please mute your phone, Anna Mazera, or mute your gadget.
So the reason why we have no blame, no excess, basically is because when the two parties are involved in an accident, there's something that we call in insurance abrogation, where the insurance knows that we are not collecting the excess from our client, but if our client was not to blame for the accident, we will still go out and pursue recovery of that amount from the negligent third party. So there's usually that consideration by insurers that they are able to recoup the cost of repairs and even that cost from the person who was responsible for the accident. So I believe that is what informs this, but a prudent insurer should be able to accommodate a client who has had a genuine accident and they have no blame, no excess. I believe it should not be something that is cast on stone.
Pastor, could you please mute Anna Mazera? Emily, hold on. Pastor, could you please mute Anna Mazera and mute anybody who is not talking? They're having a lot of noise from their side. Thank you. Emily, you can proceed.
I've been able to tackle that. I believe the issue of no blame, no excess, where I've had a minimal damage and I'm not to blame for it and it's below excess, why should my insurer not compensate me? What I would advise is that when you are renewing your cover, maybe you have an ongoing cover, please negotiate this at the inception of cover or when at the point of renewal. there are many insurers who will be able to provide this need for you. So just make sure that you can highlight it to the insurer so that it is your policy is adjusted to have no blame, no excess, or get an excess protection. So where your policy has been outlined that you'll pay excess, that is a contract, and you are party to that contract. Once you have signed out to that contract. So where you have signed that you'll be paying an excess of 2.5% of the sum of the insured, there's nothing much that it cannot be waived. So you'll just have the terms of the policy will have to be adhered to. So I would urge you that at the beginning of the cover, at inception, or at the point where you are renewing the cover, this is something that you can negotiate, or you can even change insurers, because I know this product is available to so many from so many insurance companies. Thank you.
Thank you, Emily. And John is asking that you confirm if the no blame, no excess is automatically applied to all motor policies, while Roslyn Obondi, is of the feeling that in self-involving accidents, the driver who is involved in the accident is to blame. So thank you, Rosemary, for that observation. But would you please ask what John is saying? And again, John, the same John is asking, does the excess protector cover him or cover me in all circumstances, or there are some instances where I still have to pay excess, even if I have excess protector? I think John is joining us late, and I'm sure you had spoken about that. I don't know. I think it looks like we will have to keep on.
Thank you. We'll just
going back and but again, I see Jack Majalo is saying, I'll read it word for word. You have said, and it is true, that the excess protector only applies one per policy period. Will an insured be penalized if they have more than one accident in one period, but only renews once an accident occurs for the second time? Did you get that? Did you understand that? That's what?
Yes, Noila, I got that. Thank you so much. And thank you, audience, for the good questions. I really appreciate. I just wanted to just reiterate what I've already said, maybe to our audience who are joining late, that make sure whatever is promised to you is in black and white in the policy document, because you cannot negotiate for excess protection in the middle of cover, midterm. You cannot negotiate for no blame, no excess at the time of accident. So let's have this habit of negotiating for what we want or what we admire at the beginning or at the inception of cover. So once your cover is up and running, you can only wait until that cover, the period of insurance expires, then you can negotiate for new or improved terms. So once you're ready in the boat, you have to wait for the boat to reach the shore. So let's consider what we want at the beginning. Let's look out for what is most beneficial for us by comparing what different insurance companies provide in terms of cover, and you settle down for what suits you most. Once you settle down for what suits you most, make sure it is captured in the policy document, which is the contract, which is the evidence of the contract that you have with the insurance, because it promises, it gives you the assurance of what the insurer will do at the time of an accident. So enough said for that. I just wanted us to briefly look at what is not covered by excess protection, and that will help answer one of the questions that Noela has put across. So what does it, when you have excess protection, does it mean all claims will be paid for by the insurance? No, that is not the case, because I've already mentioned that excess protection will work for claims or losses that are above the threshold of excess. Anything that is not within the excess, if your excess is 15,000 or 20,000, anything that is not up to 15 or 20,000 respectively will not be covered by the excess protection. So And any loss that is separately covered by insurance, like if you have comprehensive cover, it will separately cover for your windscreen, it will separately cover for your radio cassette, and you don't need excess protection for that because those will be automatically covered for. Anything that is generally excluded in the motor or comprehensive cover will still not be covered by excess protection. For example, a general motor policy will not cover for wear and tear. So that will not be covered if a vehicle, you have been running your vehicle without the normal servicing and something gets damaged and it can be proven the vehicle was not in sound mechanical condition by the time of an accident, and you put a claim across and you have excess protection, your excess protection, not your excess protection, the normal policy and even the excess protection policy will not respond to your to your loss. So anything that is ordinarily excluded, and when you talk about what is excluded, it is what is specifically mentioned in the policy, that is the policy document, as not covered by insurance. And there are as many as I've just mentioned one of them, mechanical damages or deliberate damage. Sorry to say, but it happens sometimes. We've had incidences. I'm talking from experience because I'm in consumer protection, and these are cases that we come across daily. You get tired of maybe your motor vehicle, your Volkswagen, whatever it is, BMW, and maybe it has been having engine problems and you've not been able to resolve and it's costing you a lot. And you organize with the mechanics and they say, I've had enough of this vehicle, I just want it written off. So anything like a deliberate damage that can be proven that it wasn't accidental will not be covered by the insurance policy, and it will not be covered by the excess protection. So I've mentioned three aspects. Anything that is still below excess will not be covered. Anything that is generally excluded by a motor policy will not be covered by excess protection. Anything that any claim that arises once you've made an excess protection claim, because I mentioned initially that once you make a claim on your excess protection policy, you need to reinstate it. The reason why it needs to be reinstated is that at inception, when you are paying for the premium, the premium that will be worked out will be for 1 year. So it's assumed that maybe or maybe not, you'll have a claim during that year. So the premium that is covered, that is paid for the excess protection is just for 1 year. So once you've lodged your claim in the period that is covered, you need to reinstate it. So for subsequent claims or losses, if you've not reinstated the excess protection policy, you'll have to pay excess, unfortunately. So you need to be conscious. If you've made a claim, you need to top up something small so that you are still protected in terms of paying excess. That obligation to pay excess is still lifted from you in case you have another incident. So those are the few cases that will not be taken care of by excess protection. So it's not a blanket cover that once you have excess protection, anything and everything will be paid for by insurance. So I don't know whether we have any questions on that.
Yes, Emily, we have questions, and you've spoken very well about the fact that what excess can take care of, and that if the values of repairs are below the excess, for instance, that the insurance company will not take care of that. And does it mean, therefore, that if there's any claim above excess, that will be paid for in full if one has excess protection? Assuming my excess protector is, we're talking about 50,000, and the cost of repairs are way above that, will that be taken care of fully by the insurance company? And see, as you're talking about the Kenyans and how we purchase insurance when it's expiring, and I thought you were targeting me because at times the people were like, wait a minute, my cover is due for expiry, and I need to replace it. But please just let us know whether the excess will then take care of when you have it. There's no limit, as asked by Jay or War. But I see another question which I think you've answered, but I still read it all the same. Can you reinstate excess protection at the time of the next claim after claiming on the excess? You reinstate it immediately, you've utilized it, or you are given some time before you can reinstate it? Thank you.
Thank you for the wonderful questions. I like the second one, that can you reinstate it at the point when you are lodging a claim? If you are the insurer, what would you do? Because, you know, insurance is supposed to take care of unforeseeable circumstances, and it will not be morally right that you know, the fact that you are claiming, let's say more than some, we have within the insurance cover, you can find a serial claimant. So if you know you fall in that category, one thing is it means it's an indicator that you are not a good driver on the road. And it means, you know, you should actually be paying for higher premiums, because premiums under insurance are pulled together to take care of the incidences, the fewer incidences that are likely to occur. So if you are in that pool and you are a serial, sorry to use that word, a serial claimant, just be a proactive and pay in advance. Because if you pay at the point of the claim, it is not morally right. It means you are simply paying so that you make a claim. And you know, according to insurance principles, that is not insurance, because an insurance principle, insurance is supposed to take care of unforeseeable circumstances. So that borders on morality. It's like when you buy insurance at the beginning and you say, I can only afford third party, so I'll pay third party. And at the point of you have a third party cover for 1 year, and you get involved in an accident, and now you want to change that cover to comprehensive behind scenes and go and make a claim. You know, those kind of things are not morally right. And the risk that you run is that with time, insurers nowadays share information. With time, you'll realize that you have no insurers who want to cover you, because you might be known, your name might be known. So you run the risk of your policy being canceled, because as you're aware, the policy of insurance gives the right to either party to give notice for cancellation of cover. So you run the risk of having to receive that notice that your cover is being canceled, and you run the risk of having a difficult time when you are changing insurers, because insurers usually will call back and you'll tell them you are initially in company A. So they might call back to check your insurance history. And if they find that your loss ratio is too high, then you might find it difficult to secure a good cover at reasonable premiums. So the other issue that I think the other question was bordering on, if you have excess protection and your claim is above the threshold of excess, yes, the insurance company should be able to pay fully for the loss that you've covered without asking you to pay excess. So if your excess is 20,000 and the claim or the loss estimate is 70,000, then the insurance come in 100% to pay for that loss, and you are not asked for to pay for the excess. That's why at the beginning we defined the reason for excess protection is to take that obligation from the insured, from the policyholder, at the point of making a claim. So you'll only need to report the claim and give the necessary documentation. Then the insurer will come in 100% to take care of your loss and to reinstate the vehicle to the position it was before the accident. Thank you.
Thank you, Emily. And I think as we move to the end, there's a question on by Joanne Maura, and she's asking whether the excess amount, the amounts you pay to purchase excess, is it a top up to premium? And again, she's asking, what if you have not used up your excess during your contract period? Can it run over to the next period? And we are also having a concern from Jeremiah Kaigwara, who states, and I'll just read what is written, that the negotiations to have favorable clauses in policy is just a back and forth kind of game. It takes a long time, and is asking whether it can be completed in good time. Maybe we'd want to speak to the TCF and what as a regulator we are for and stand for and are promoting, as you respond to Joanne about the excess. Is it a top up to premium, and whether it can be carried over to the next contract period? Thank you.
Thank you for those questions. The issue of excess protection is an extra cost on top of the premium, but it is usually a very minimum cost. I don't think any excess protection cover will go beyond 3%. So you need to just compare how much is 3% maybe of your sum insured as compared to that excess that you are going to pay in case of an incident. So yes, it is an extra cost on top of the ordinary premium, but usually it is minimal. To guarantee, I don't think it will go beyond 5%, but I know it's between 2.5% to about 3%. I've not heard of any incidences where excess protection will go beyond 5%. I'm not very clear because I'm currently not in the industry, but it is very minimal, Joanne. Yes, it's an extra cost. And the issue of if you don't utilize it, does it go to the other period? No, it does not go to the other period. The principle of insurance is about large numbers. And as we've already said that many people come together to put this premium into one pool, and the pool is held by the insurance company. In case of an incident, a loss, a theft, a fire, the persons who have been involved in the incidences where the risks have happened, the money, the compensation is paid from that pool. So, and motor insurance policies are also annual policies. At the end of the annual period, maybe you're insuring from June to June the following year. At the end of next year, when the policy period comes to an end, you start afresh, you know? A few companies say we are renewing on existing terms, but at the end, when that contract comes to an end, when the period of insurance expires, you are free to negotiate new terms. You can enhance and agree on better, more elaborate terms, but excess protection will also expire when the policy period expires. So you have to renew. Now it will be your responsibility to decide, do I still need that excess protection? Yes or no? Because maybe you are saying that I've had this excess protection for the last 5 years. This year I'm going to drop it. And you might drop it, yes. And unfortunately, that's the year, the 6th year is when you have the incident. So it's just a matter of balancing out. Are you able to afford it? Is it good for you? Yes. If no, you can drop it, but you know, choices also have consequences. So it is really basically about you, what you need, what the risk that you need to cover. Are you able to afford it? Then the issue of the favorable clauses in the insurance contracts, I want to comment that IRA has done a lot to standardize the insurance policies. Motor policies is one of the policies that was standardized a while back. I think it should have taken effect in 2012, 2013. So the industry should be using standardized motor policies, and the terms and clauses there, we ensure that when we are standardizing those policies, those are the terms and the clauses were looked into. And it was IRA's considered opinion that were favorable. And if any insurer adds any unfavorable clauses, it should not, insurance companies should be using the standardized motor policies, which according to IRA should be favorable to the policyholder and the insured. So that is a concern that has been addressed, and a number, not just motor, a number of other policies have been standardized by the IRA. We have a burglary, we have a domestic package. If you go to the IRA website, you'll be able to see the standardized motor policies. You can even download and see, is this comparable with what have been given by the insurance company? And if you identify any clause or any condition that you feel is unfavorable to you, you can always ask your insurer why that policy condition is there, or you can also call IRA if it is a variance, or it is something that is off from what IRA has recommended. So IRA has done quite a lot in ensuring that the policyholder is well protected in this line. Thank you.
Thank you, Emily. And I would like for you to just respond to the two last questions. You're being asked, you have a policy, and midway you realize that you want to purchase insurance, and maybe your policy is, for instance, 7 months into the contract period. Can the excess provision be given on a prorated basis, so that it starts for the period ending, not because you have an accident, but you just realize today that, wait a minute, I may need to get this excess protector. And then the last one is the question from Roslyn. She's asking, what happens when you have a no blame, no excess protector, and you have a no blame, and let me just scroll down. I think Roslyn could ask. Roslyn, if you're on the line, maybe you could ask the question yourself. I think it can come better from you. You can unmute and ask, Roslyn or Bondi. Okay, she's asking, what if you're involved in an accident whereby you are not to blame? Do you need to reinstate your excess protector after the claim is settled? Did you get it, Emily?
Just come again.
She's asking, what happens when you are, what happens when you have a no blame, no excess, and excess? What happens when you have a no blame, no excess, and excess protector, and you are involved in an accident whereby you are not to blame? Do you need to reinstate your excess protector after the claim is settled? I think you spoke to that, but you can.
I think she's mentioning both no blame, no excess, and excess protection. If you have both on the policy, I think you are doing so well. You have a lot of money, but I think either can work for the purpose of taking care of the obligation to pay excess. So you either have no blame, no excess, and if you have that, it runs through the period of insurance. So whatever happens, if you are not to blame for the accident, that one is not reinstatable. But excess protection is reinstated once you have made a claim. If you've not made a claim on your policy, there's no need to reinstate it. Yeah, then
okay.
the other
one.
Naila, did I get you?
Yeah, the one for you want to buy the excess cover midway your policy.
The proration. It is doable, and I believe most underwriters would accommodate it. The only issue that I think the underwriter would need to verify is that has the loss or has the accident happened? Because as you see, even with the medical insurances, most people will maybe run to buy medical insurance once they've been diagnosed with a condition. So one thing that the insurer maybe would need assurance for is that has any accident happened to the vehicle? Maybe they'll ask to see the vehicle, but I think it is doable. It can be accommodated. Just like when you have a cover for one car and you bring on another cover and you want it to be covered in your current policy so that you have two cars in one policy, they can be able to prorate that premium. So it is doable. They will be able to charge you prorated excess protection fee, which is very much doable. Thank you.
Thank you, Emily.
I have a number of questions also coming from Tira, and I think Mary is.
Yeah, you could answer those ones quickly, another 10 or so minutes, then we can close.
One. The last one. Okay, there's one question here. Which percentage of valuation are you supposed to pay for excess in case of an accident? Which percentage of valuation are you supposed to pay for excess? in case of an accident. So I think the question here is because when we talk about valuation in insurance is different, but I think what the client is trying to ask is the percentage of the excess. The challenge that I think most of our policyholders and are having is that they don't get to see the policy document. So I just want to make it known to our listeners, our audience today, that a policyholder, you have a right to the policy document, because once you have the policy document, you'll be assured that this is the percentage that I'm supposed to pay in case of an accident. It should be known upfront. It's not something that you should be told at the point of an accident. No, get your policy, make sure the insurance company delivers the policy document upfront from the time of inception of cover. So once you have that, the excesses for motor theft, for fire, usually they are outlined. And also there's usually excess for when you have anti-theft device, it's lower than when you don't have anti-theft device. Those excesses are usually outlined in black and white in the policy document. So to just deal with that, make sure you have the policy document from the insurer. If you're having issues with obtaining the policy document, you can always contact IRA, because it's your right to have the policy document. Thank you. Mary, do you have any other? Thank you. Do you have any other question, any concern, any comment, Noila?
I don't have a question, but I've just asked some time about the late penalties and the payment, especially for the agents, and they have just confirmed that the payments, the amount stipulated for payments for all industry players is stipulated in the Insurance Act and regulations, and I'm informed that the penalty for rate renewal is in section 188, and that regulation 37 of Insurance Act actually prescribes the fees to be paid and the penalties. Maybe just to make to let it get known to the audience that as an authority, I mean, Emily and team and the staff members do not have the capacity to waive the penalties or to waive the amounts to pay, because it is in the law, and so that has to be done as the law is. That's why before even the deadlines, their circulars are shared well in advance, just indicating the time period for which then you have to make your payments for registration for the preceding year. And so I think with that, we are 7 minutes into our time, and I just want to thank everybody who has been part of this conversation. And just to let you know that the same has been, we were streaming it live on IRA's Facebook page, and the beauty about that is that you can always go and you can have it replayed. We will be here again next week, and we will be talking about surrender value. It's been a big issue. Surrender value. Why do you not get paid all your amounts at the sum assured while you are getting out? Why the surrender value so little? And what to look out for actually when you are purchasing insurance. So as you sign out, please remember to go for your policy documents if you do not have it, or any insurance cover that policy that you've got, because that is what really tells you what you have covered. Indeed, is the proof that you have an insurance cover. So until then, and until next week, it's a good afternoon to all of you, and thank you for signing in. Yes, Emily.
Before you close, I can see ARMS insurance brokers are asking whether we'll share the presentation. I believe Noella has answered that by saying that it will also be streamed on Twitter, so you can check it out. The questions and the responses that were given, you'll be able to get it on that platform, on our social media platform. Then someone is also asking maybe a last one on examples of exclusions. You'll only get the exclusions in the policy document, and they are not standard across. So exclusion, make sure you have your policy document. I just highlighted one of them, mechanical or wear and tear or mechanical damages, the damages that are progressive, gradual, those ones will not be taken care of. When you are driving without a DL, you know, that is breach of the law, it will not be taken care of. Drunk driving, you know, those ones will not be taken care of. Maybe when we're talking about what is going on, the pandemic. So currently you can look at your policy, does it cover pandemics or not? But you'll find like most insurance policies will have an addition to just take care of what is going on in the current economy. But usually it will be at an additional premium. So just make sure you check out, because an exclusion is only an exclusion when it's written in black and white in your policy document. Thank you. Thank you. Thank you for having me. Thank you for this audience. I'm really grateful.
Thank you, Emily, and goodbye, everyone. Thank you for logging in, and let's meet again next week for our conversation on surrender value. I wish you all a good afternoon. Asanteni sana.